Update: seniors stop paying property tax in 2026. You're legally exempt after 65 plus. Most don't know. There is something quietly happening across America right now that almost no senior is aware of. Every single year, millions of retirees over the age of 65 are paying tax bills they may not legally have to pay. Not just one tax, not just two. 7 distinct types of taxes, fees, and bills that come automatically, get added to auto pay, and quietly drain retirement savings month after month, year after year. And the worst part is nobody, not the IRS, not your state, not your county, is ever going to call you and explain that you may already be exempt. I want you to take a moment and think about this. After working for 40 or 50 years, after paying into the system your entire adult life, after finally reaching the age where retirement is supposed to bring relief, you continue to receive bills that you may have been legally exempt from for years already. The money has been going out the door, sometimes thousands of dollars at a time, and nobody told you it did not have to. By the end of this video, you will know exactly what those 7 tax bills are, who qualifies for the exemptions, and how to find out if you are one of them. So, before we go any further, if you, your spouse, or a parent is over 65 and still paying any kind of tax bill, please stay with me until the very end. This information could quietly save your family thousands of dollars this year and every single year for the rest of your life. You're watching Retirement Watch, where we explain Social Security, Medicare, taxes, and retirement rules, and welcome to Retirement Watch, plain English, so you can make informed decisions with confidence. I'm Robert Hale. If videos like this help you feel more prepared and more protected, please subscribe to this channel right now and turn on the bell. The reason this matters so much is simple. Tax laws in America are written with hundreds of exemptions, deductions, and credits specifically designed for seniors. But the system is not designed to help you find them. The bill simply arrives, you pay it, and the cycle continues until somebody finally takes the time to explain it. That is exactly what this channel does. We take the tax laws, the exemptions, the rules, and we break them down clearly, calmly, in plain English. So, the seniors who deserve to keep their own money actually get to keep it. The retirees who know about these programs save thousands every year. The ones who do not just keep paying. So please hit that subscribe button, turn on the notification bell, and let's walk through the 7 tax bills you may be legally exempt from in 2026, one by one. Tax bill number 1, property taxes. This is the largest and most common tax bill seniors continue paying when they may not have to. Almost every state in the United States offers some form of property tax relief for seniors over 65. Tax bill number 1, property taxes, homestead freeze, circuit breaker, senior homestead exemptions, property tax freezes, circuit breaker programs, veterans plus senior combined exemptions, senior deferral programs. The names change from state to state, but the underlying idea is the same. If you are over a certain age, and in some cases if you meet certain income limits, your property tax bill can be reduced, frozen at a previous year's amount, or in some states completely eliminated. The savings can be enormous depending on your state, your county, and the value of your home. The right exemption can save you anywhere from a few hundred to several thousand per year. And these savings continue for the rest of your life as long as you remain qualified. The common mistake is assuming that the county will automatically apply the exemption when you turn 65. They will not. You have to apply often within a specific window each year. And the seniors who miss the window often miss the entire year's savings. If you have not specifically asked your county tax assessor about senior property tax relief, this could be one of the most important phone calls you make this week. Even a single conversation can lead to thousands of dollars in savings every single year going forward. In just a moment, I will tell you about the second tax bill, which catches almost every American senior by surprise because it is hiding inside your annual federal tax return. Just stay with me. Tax bill number 2, the extra federal standard deduction for seniors. This one is hiding in plain sight on every single federal tax return filed by a senior in America. Most retirees do not realize that once you turn 65, the IRS gives you an additional standard deduction on top of the regular standard deduction for 2026. That extra deduction can be tax bill number 2. Extra federal standard deduction for seniors, approximately $2,000 for single filers, and even more for married couples where both spouses are over 65. This extra deduction reduces the amount of your income that is subject to federal income tax. Over a typical retirement, this can save thousands of dollars in federal taxes that you would have otherwise paid. And here is the part that surprises many seniors. If you have been taking the standard deduction since turning 65, but not specifically claiming the extra senior amount, you may have been underpaying yourself for years. The common mistake is using last year's tax preparation software, last year's CPA notes, or last year's return as a template and not adjusting for the extra senior deduction when you turn 65. The IRS does not call you on your birthday and explain this. They simply process whatever you submit. If you are not sure whether you have been claiming the additional senior standard deduction, take this year's return to a qualified tax professional and ask them specifically to review the past 3 years. In some cases, prior year returns can be amended to recover overpaid taxes. Tax bill number 3, state income tax on Social Security benefits. Most Americans know that Social Security can be partially taxable at the federal level. But what most seniors do not realize is that the rules at the state level are completely different and in many cases far more favorable. Currently, the majority of states in the United States do not tax Social Security benefits at all. Some never have. Others have phased out their Social Security taxes in recent years. And among the states that tax bill number 3, state income tax on Social Security, still do tax Social Security. Many offer significant exemptions or reductions specifically for seniors. If you live in a state that does not tax Social Security, this point may not apply directly to you. But if you live in one of the few states that still does tax Social Security, or if you are not sure, this is a question worth answering this week. Some retirees have been paying state income tax on their Social Security for years when they were actually eligible for a senior exemption or partial deduction the entire time. Others may benefit from adjusting their tax planning to reduce that tax going forward. The common mistake is assuming that if state income tax was withheld from your Social Security in the past, it must be required. It is not always required, and the rules change, new laws pass, new exemptions are created. What was true 3 years ago may not be true today. This is one of those areas where a one-time consultation with a qualified tax professional in your specific state can pay for itself many times over. Tax bill number 4, capital gains tax on the sale of your home. This is one of the most important tax rules in the entire retirement system and one of the most misunderstood under current federal tax law. When you sell your primary residence, you may be able to exclude up to $250,000 of capital gains from federal taxes if you file as single and up to $500,000 if you file jointly with your spouse. To qualify, you generally need to have owned and lived in the home as your primary residence for at least 2 of the previous 5 years. For many seniors, tax bill number 4, capital gains on the sale of your home, section 121, who have owned their home for decades and seen significant appreciation. This exclusion can save tens of thousands, sometimes hundreds of thousands of dollars in federal taxes when they sell. And yet, every year, retirees sell their homes without fully understanding this rule, without planning the timing carefully, and without consulting a qualified tax professional. The mistakes can be expensive. The common mistake is assuming that selling a home in retirement automatically results in a large tax bill. For most seniors, selling their primary residence after living in it for many years. The opposite is often true. With proper planning, much or all of the gain may be tax-free. Before selling your home in retirement, take time to understand exactly how this exclusion applies to your specific situation. A qualified tax professional or real estate attorney can help you avoid mistakes that cost tens of thousands of dollars. Quick reminder before we keep going. If this kind of plain English explanation is helping you, please subscribe to Retirement Watch and turn on the bell. We post new videos every week breaking down exactly these kinds of tax exemptions and rules in language that respects your time and your intelligence. The seniors who stay informed save thousands every year, the ones who do not just keep paying. So please hit that subscribe button now if you have not already. Tax bill number 5, vehicle registration and DMV fees. This is one of the most overlooked tax bills in America and one where the savings are quietly available in almost every state year after year. For seniors who simply ask, many states offer senior discounts on vehicle registration fees, license plate fees, driver's license renewal fees, and certain other DMV-related charges. The savings per item may seem small, but over a typical retirement, they add up to hundreds or even thousands of dollars. In some states, seniors over a certain age can register a vehicle for a reduced fee or even pay no annual registration fee at tax bill number 5. Vehicle registration and DMV fees, all for certain types of vehicles. Other states offer free or discounted state identification cards in place of driver's licenses, free vehicle inspections, or extended renewal periods that reduce how often you have to pay. The common mistake is assuming that if a senior discount existed, the DMV clerk would have applied it automatically. They will not. The discount is on you to ask about, and in many cases on you to specifically apply for. Before your next vehicle registration renewal, before your next driver's license renewal, before your next visit to the DMV, take 5 minutes to call your state's DMV office and ask, do you have any senior discounts I might qualify for? That single question can save you money every single renewal cycle, often for decades. And in just a moment, I will tell you about the 6th tax bill, which most seniors do not even realize is a tax until they get caught by it. Just stay with me. Tax bill number 6, medical expense deductions. This is technically not a tax bill in the traditional sense. It is a deduction that, if used correctly, can reduce or completely eliminate part of your federal income tax bill, and almost no senior uses it to its full potential. Under current federal tax law, qualifying medical expenses that exceed 7 and 12% of your adjusted gross income may be deductible if you itemize your deductions on your federal tax return. For seniors with significant medical costs, including health insurance premiums, prescriptions, dental work, vision care, hearing aids, medical equipment, and long-term care expenses, this deduction can be enormous. Many retirees do not realize tax bill number 6, medical expense deductions, 7.5% AGI rule that even Medicare Part B and Part 500 premiums paid through deductions from their Social Security check count toward this deduction. So do supplemental insurance premiums, certain home modifications for medical reasons, transportation to medical appointments, and many other expenses most seniors never track. The common mistake is assuming that the standard deduction is always better even when total medical expenses are high. For some seniors with significant medical bills, itemizing and claiming the medical deduction can result in much lower federal taxes. Before your next tax return is filed, talk to a qualified tax professional about whether itemizing makes sense for your specific situation. And keep careful records of every medical expense throughout the year. The seniors who track their expenses save thousands. The ones who do not just take the standard deduction and lose the benefit. Tax bill number 7, property transfer tax and gift tax on family transfers. This is one of the most overlooked taxes in retirement planning and one of the most expensive when seniors get it wrong. When seniors transfer property to their adult children, grandchildren, or other family members, certain taxes can apply depending on how the transfer is structured. Property transfer taxes, gift taxes, capital gains issues, and state-specific rules all interact in ways most families never anticipate. The good news is that many states offer specific exemptions for parent to ex-child and grandparent to grandchild property transfers. Some states allow the family to transfer ownership of a home without triggering full property tax reassessment, which can save the next generation tens of thousands of dollars in property taxes per year. The Federal Gift Tax Exclusion Tax Bill No. 7, Property Transfer and Gift Taxes, currently allows individuals to gift a certain amount per year per recipient without triggering federal gift tax consequences. For married couples, that exclusion can double. The common mistake is making a property transfer to a family member without understanding the tax consequences in advance. A well-intentioned gift can sometimes trigger thousands of dollars in unexpected taxes, lost property tax exemptions, or future capital gains issues for the recipient. Before transferring any significant property, real estate, or large financial gift to a family member, take time to consult with a qualified tax professional or estate attorney. The cost of the consultation is a tiny fraction of what you could save by avoiding a single expensive mistake. Now, let me bring everything together with a calm checklist you can use right now, no matter what state you live in. 1. Call your county tax assessor and ask about senior property tax exemptions, freezes, circuit breaker programs, veterans exemptions, and deferral programs available in your county. 2. Confirm with your tax professional that you have been claiming the additional federal standard deduction for seniors on every return since you turned 65. If you have not, ask whether prior year returns can be amended. 3. Find out whether your state taxes Social Security benefits, and if it does, whether you qualify for any senior exemptions or reductions. Consider speaking with a qualified state tax professional. 4. If you are considering selling your primary residence, talk to a qualified tax professional or real estate attorney about how the federal capital gains exclusion applies to your calm 7-step checklist specific situation before you list the home. 5. Before your next DMV visit, call your state DMV office and ask specifically about senior discounts on vehicle registration, license renewal, and identification card fees. 6. Keep detailed records of every medical expense you pay each year, including Medicare premiums, supplemental insurance, prescriptions, dental, vision, hearing, and medical-related transportation. At tax time, ask whether itemizing and claiming the medical deduction would benefit you more than taking the standard deduction. 7. Before transferring any significant property or large gift to a family member, consult with a qualified tax professional or a state attorney to understand the federal and state tax consequences. A single hour of planning can save your family tens of thousands of dollars. These are not gimmicks. These are not loopholes. They are real federal and state tax rules written specifically to help American seniors keep more of their own money. The retirees who know about them save, the ones who do not just keep paying. And now, an important reminder, this video is educational only. It is not financial, legal, tax, medical, Social Security, or Medicare advice. Retirement Watch is not affiliated with the IRS, any state Department of Revenue, any county government, the Social Security Administration, Medicare, or any government agency. Eligibility for any program, exemption, or deduction depends entirely on your individual situation, your state, your county, your income, and other factors. Tax laws, exemption amounts, and qualification rules change. Always verify your specific eligibility with your local county tax assessor's office, your state Department of Revenue, the IRS at IRS.gov, or a qualified tax professional, estate attorney, or financial advisor who knows the rules in your specific area before making any decisions. If you have made it this far in the video, thank you honestly. The fact that you sat through this entire conversation already puts you ahead of important disclaimer. Most American seniors, you are doing exactly what the retirees who keep more of their money do. You are slowing down, you are paying attention, you are learning the rules before somebody else benefits from your ignorance. That single habit, more than any single financial trick, is what separates a comfortable retirement from a stressful one. If this video helped you, please subscribe to Retirement Watch and turn on the bell. We post new videos every week explaining Social Security, Medicare, taxes, and retirement rules in plain English with the same calm, no-pressure approach you saw today. The seniors who follow this channel save thousands every year, the ones who do not just keep paying. And please share this video with someone in your life who could use it. A parent, a sibling, a spouse, a neighbor, a friend at church. Final thoughts. Sometimes the most loving thing you can do for the people you care about is forward them a video they did not know they needed. A short conversation today, started by you sharing this video, could save someone you love thousands of dollars every year for the rest of their life. Before you go, I would like to hear from you. Comment below which of these 7 tax bills surprised you the most. Property taxes, the extra federal standard deduction for seniors, state income tax on Social Security, capital gains on the sale of your home, vehicle and DMV fees, medical expense deductions, or property transfer and gift taxes. I read those comments. They help me decide which topics to cover in more depth in future videos. I'm Robert Hale, and this has been Retirement Watch. Take care of yourself. Take care of the people you love.